We're live. Are you going to bring it in this week? I don't mean to rip it in with a normal sort of sweaty intro that we go
Well,
for.
you're already going. You might as well keep going. Welcome
Yeah,
back.
hello. Welcome back to episode number 11 of Invest Interest. I'm Dion. This is Lewis. And we are back for some more, roundups of the markets. We've got an interesting topic this week with regards to what we have under our portfolios and just sort of explaining what stocks we have. And as always, if you want to get involved, get yourself in that chat and rip us out some questions if you like, or if you just want to get involved in the chat room, just go ahead. Right. Have you been up to much this week, Matt? I'm not really caught up with you. Any sort of messages outside of
No, I don't think we've
this?
spoken for an entire week.
Yeah, I know. It's been a while.
I mean, it was a pretty busy week, but not very productive.
Right.
Just catching up with friends. I mean, there's some value in that. It's not Is it productive? Not productive in this sense. Productive in general well-being sense.
Yeah. Fair enough. What have I been up to? Well, I have been absolutely lambasting all the news that's been going on recently, but we'll get on that in a minute.
Fair.
I had a friend up for the week. That was good as well, so I caught up with him. Just started to get back into the Japanese studying, so I can smash my N4 exam in December, but obviously that's 3 months away, so I'm just going to be slowly building back into that. I find out my results in a couple of weeks' time for my previous exam.
Fingers crossed.
I also got a certificate last week to say that I officially passed my technical report for the ICME. So like I said, I've just got now to wait for my CNC report to be accepted, and then hopefully I'll be a chartered engineer before you know it.
Busy week.
Busy.
Yeah.
Busy.
Productive week.
Yeah, just fly by.
Yeah, the weeks do fly by.
Yeah.
I started to audiobook. Is it Chris Voss? What's it?
Chris,
No.
Chris Voss.
Is it Chris Voss?
Never split
the difference.
Yeah,
That's the one.
You started listening
I
to
started listening to it on the way into work. Yeah, it's quite interesting. Yeah.
Yeah, we'll pick up on that later on then in the episode if you want to have a chat.
Yeah.
I've done a review on that,
Sure.
so we can quite easily rip that one up too.
Cool. Sounds good to me.
So let's crack straight into the news that we've had over the last week.
A lot of uncertainty.
Oh my days! It just seems to be accumulation of uncertainty really at the moment. I mean, you've got the whole U.S. trade war with China flaring back up again this week. They mentioned that they were going into talks on Monday. Those talks seem to have quite, I guess, escalated and probably not gone really anywhere. Chinese have said that they're now not going to be. They're going to halt all purchases on American agriculture. Trump said he's threatening to put another 10% tariffs on another 300. Is it 300 million or 300 billion? I think it's billion. No, it can't be billion. Can it be billion?
Billion. I don't know.
There's 3 zeros we've got to play around with there, so it's quite a lot. But
No,
either way,
I'm sure the American billion's slightly different.
Yeah, but I don't think when they're reporting it in the UK, they'd be.
Ah, okay.
But either way, it's putting some more tariffs on. China are going to retaliate, and just like that, a couple of tweets out from the Trump man, and he said, "This is unfair. China are unfair." And then I think now today was there a certain special value that the yuan, which is the Chinese currency.
Yep.
Usually it's been above historically 7 yuan to $1, and they've now the Chinese have apparently let that go through that particular critical moment. So I don't know whether that's going to affect their imports or exports because I'm not too tied into how the Chinese economy works at the moment, but I would imagine that Trump's probably not going to be happy with that. He's probably already complained. And markets in the moment in Asia are probably feeling quite jittery as the UK markets have definitely been affected by it as well, I guess.
Well, I think.
And then we've got.
Sorry, mate. Before you move on, one of the complaints that Trump had, because I just saw the tweet come in, was he's accusing the Chinese of currency manipulation.
Yeah.
So I'm not quite sure what that entails, but it sounds complex. I think they're artificially inflating the price or something like that, or that's what it's accusing them of.
Right. Yeah, I'm not really into the whole currency and forex stuff, so I don't have the greatest of background in it. It might be something in the near future that we might want to get involved in, but there seems to be a lot of currency movements really at the moment because the pound's tanked again this last week. It's dropped from £1.25 to the dollar. No, $1.25 to the pound. And then in the last week, it's dropped 4 cents, which doesn't sound like a lot, but in currency terms,
That's huge.
nearly
Yeah.
400 points.
Yeah.
As pips, 400 pips. Correction. So
Percentage
yeah,
points. Yeah.
big moves there. That's probably down to current couple of things for the UK markets. Boris Johnson's going about his usual. I say his usual. He's pivoting his positions with regards to how he wants to handle Brexit. He's basically said to the European Union that he's not coming back to the table until they get rid of that backstop. And now they're basically just playing brinkmanship until who cracks first. We've only got 90 days left till the UK is supposed to be leaving the European Union on the 31st of October.
Yeah.
So I think the market's just trying to price in the uncertainty. It looks like the early signs are that everyone seems to think that the no-deal Brexit is starting to be a front winner. Runner, not a winner. Front runner. So people, the markets in general, starting taking a bit of a hit.
Yeah, I think but obviously we'll jump onto Chris Voss and never split the difference later. That's something he actually mentions in that book.
Negotiate.
Yeah, negotiating. Never. You can't. Don't split the difference, as in don't settle halfway.
Yeah. Don't jump at the first opportunity to split halfway.
So. Like he says in that book actually that no deal is better than splitting the difference.
Yes.
I mean, I'm not sure how that works on country terms, but we're about to find out. We'll see how practical his guidance is.
Yeah. So, on other news, Aston Martin we've got down here. The stock registered last October on the FTSE for £19 a share. And just last week, it had tanked down to £4.75.
Ouch.
Now, the results had indicated that they'd lost nearly 80 million for the first half of this year. I did a little bit of digging just to see why this was particularly the case. I think it's the cost of the, obviously, manufacturing and the construction and the engineering concept. And obviously, it's a sort of luxurious brand, isn't it?
Yeah.
The cars are not cheap. Do you think the market's shrinking for these sort of cars going forward as we push towards AI, automated cars, and then the electric cars? Because Aston Martin have only just produced one fully electric car called the Rapid E, and that's 250 grand.
Is it Rapid or Rapide?
Yeah, Rapide.
Come on.
Sounds British.
It's classy, right? So I think there's always going to be a market for those type of cars, but I don't know what their strategy looks like, and it's one of those things where if they increase their volume output too much, it actually decreases the value of the goods. So it's like if you made 1,000 items, you got kind of limited stock there, so a limited edition. So you can charge a premium for that. And then if you try and output more of those, say 10,000, anybody can have one now. So it reduces the cost of them, if that makes sense, because the supply and demand. It's very basic concept, isn't it?
Yeah, for sure.
So the price of those Aston Martins is often derived by kind of the rarity in that type of luxury market. So I think they've got to be careful with their strategy. But yeah, I don't know. Something's not working.
It's clearly struggling. I don't know whether the whole market strategy they've got going forward or where they're manufacturing the parts. I mean, did they import a lot of the raw components? Because if they're doing that, then obviously the pound's purchasing power has been weakening over the last year, so that's going to be pushing up costs, which could have affected it will obviously have affected the margin and the bottom lines.
Yeah.
But I don't know, because I looked at Ferrari and they'd made a profit in the first quarter of the year. Mercedes had made a profit as well. So it just seems to be something that's just Aston seem to have got themselves stuck into.
Are they linked? There's I don't know. They're not. It's Williams that I'm thinking of. I was just thinking of Williams in Formula One underperforming. So I don't know whether that affects market costs or value or just public
Man,
perception, but that's
yeah,
not Aston
I'm not
Martin,
too
so
familiar into the car market, but
yeah,
I just saw it's pretty much quartered.
that's terrible investment.
Yeah, but if you bought in last October, you must be kicking yourself. But is it now? It's trying to time the bottom, right? Do you want
Yes.
to try and catch a falling knife, or do you want to just see? Okay, well, I'll wait till it starts going back up again and see if it recovers in its next quarterly update. Or do you think, well, it's £4.75 now. It's an absolute steal. Let's just go for it.
What sort of? I don't know. It depends what your goals are, don't it? Like, do they pay dividends? That's my first
Yeah.
question. You know,
Yeah,
if they're paying a strong dividend, and that
but
seems
it's about maintaining it.
seems
Yeah.
unaffected. I don't know. I don't know what their goals are. I don't know what what your goals are for buying stocks. It doesn't look like one that I would buy.
Well, I
Um,
might put it on the watch list because I'm interested in stuff like that that
yeah.
tanks that much, seeing if it can recover.
Okay. Just keep an eye on it.
So I might, yeah, I'm gonna keep an eye on it. Put it on the list, the watch.
Fair enough.
Next one, you brought this one down.
Did I?
I do believe so. It can't be me.
Oh yeah. So this is a huge like thing that just caught my eye. It was like, wow,
This is the thing.
wow, this is a thing, and also wow, this is a thing. Like it's kind of two opposite ends of the spectrum. My reaction to it. So
Right.
there's this thing where um, there's a couple of apps, a couple of companies out in Asia. They're allowing people to live stream almost a full 24/7, like just their lives, even the boring bits,
Okay.
even when they're sleeping, just
Or
constant
brushing the teeth
connection,
or something like that.
everything.
Dude, what?
It's just this, it's driven from this kind of loneliness or this effective or like perception of loneliness that seems to be going on out there. It's this
Right.
younger culture, kind of probably under 30s, maybe a little bit younger, and
Okay.
just having this constant need for connection is driving so much internet traffic to these people that are online all day ready to connect. There's again supply and demand. People who want to connect and people who putting themselves out there to connect. And
So what? Are they even like advertising brands there on this
well, I mean, I guess
stream that
that's
they're
how their
doing?
money's
Or
made. um,
because I'm going to say there must be like it's obviously with social media like Instagram, for example, or
it's
Snapchat
very
when they're throwing
similar,
an ad out
yeah.
there. But if you're 24-hour streaming and you're just eating a bit of food, is that product placement? And like, have you specifically gone out of your way that day?
It's not always about selling a good that's going to get you paid.
Yeah.
Obviously, every time someone clicks to log in to watch you, they'll roll an advertisement on that person, like we do when we log
Yeah.
into Twitch. So you get that sort of stuff, and the streamer will get a cut of that. But I don't know, it's a strange one because it's kind of, you're reinforcing being isolated by streaming all day because you're not going to be doing it with friends, and then
Yeah. Yeah.
you know at the same time, wow, you can actually monetize your boring life. Like, I mean, where do you sit on that kind of spectrum? It's just like it's amazing,
Where do
yeah,
you stop really? I
shocking
mean,
and
like
amazing at the same time.
I can say like yeah for sure. And then things like just driving your car, like the car keeps streaming whilst they're doing that,
You
right?
just plug the phone into charge. They're only streaming from the phone. It's not like a big
How
camera
much
setup.
data must that be going through? Absolutely sapping
Yeah,
it.
yeah. I just saw it. It really grabbed my attention. I mean, that's what news articles are there to do, aren't they? But when I was reading it, I was like, wow, if there's a market demand for this, this type of industry, um,
Mm.
you know, people are making a living from it. They're not even doing anything. They're literally just logging on
Well, that's the
online.
thing. Innit? If they're not doing a job like during the day,
Yeah,
then, like I don't know about you, but if I was streaming every day, I'd feel like I'd have to do something good for the day for people to be watching it. But I couldn't
doesn't
do
seem to
that for
be
like
the
more than 2 or
case.
3 days in a row. I'd be like, well, I've run out of stuff to do now because I've constantly got this thing on me. Like I'm not planning that far in advance.
Yeah, I think there's a little bit that comes from it then, with it being so authentic that um, essentially they're just living life. Like, I mean, so obviously some people are out and about driving, doing things, or going places, but other people are just playing video games, chatting to people online. Like, people can jump in the chat like they can on Twitch now and go back and forth and yeah,
Okay,
it's
well,
just
fair enough.
crazy that
Well, it's
that's a
probably only going
future
to get bigger
market.
as well, I'd
Exactly.
imagine.
Yeah, that's what kind of grabbed my attention. It's like, well, you know, interesting stuff.
Yep,
Yeah.
I know. Yeah, I get that.
Did I
Right,
drop the other one on as well? The
I think you did because I don't remember putting anything about Scottish business Weir
So
Group.
Weir Group, it's
An engineering
it
firm, right?
is, yeah. So they're very similar. They're a holding firm, kind of similar to what Wood Group are. Where
Hmm.
Wood Group of holding a lot of kind of petrochem type companies or similar.
Yeah, yeah.
So this Scottish business called Weir Group have had a few kind of struggling times in the past couple of years, and then they took
Yeah.
a punt, I guess, on getting involved with some mining technologies. So they bought up
Okay.
some lower, kind of like what happened with what company?
Amex last
Yeah, that's
year
the
when
one.
it got
Yeah.
swallowed up by Wood Group.
So very
So
similar.
it's bought some subsidiaries, yeah.
Yeah.
Got itself a sort of big conglomerate now, and it's just got its fingers in a lot of markets, I guess, kind of like what Atkins has.
Yeah, I guess. Just like they own a lot of smaller holdings, and there's been a huge demand for one of their company's technologies, which is in mining. Obviously, huge mining industry coming back, I guess, for the materials that are held in the ground, and it's really helped
Is that in
this
the U?
company. Yeah,
Sorry,
UK based mining.
is
Yeah.
UK based? So and is the work that is the contracts they're winning? Is that for mining projects in the UK, or is that over in places like Canada or
No, it's
Africa or
international
America?
work, but I think the drive for the mining technology has been driven from the UK markets.
Right.
Um, so it's a combination of mining technologies and services.
Mm.
So yeah, that's
Yeah. Well, I imagine their profits are going to be absolutely soaring as well due to the pound tanking. Because if most of their business is international, and then they're getting better rates when they convert it back into sterling, you often find that when the pound is down, most of the FTSE 100 companies are all international companies, so they will generally have quite good quarters. For example, I mean, if you look at the oil industry, where the currency basically is dollars, you're dealing in dollars per barrel. When the pound's down, the English companies will be getting higher profits,
yeah,
I guess, or massaging higher profits, if you want to call it like
yeah.
that.
So that's kind of on the arbitrage of the pound being weak against the dollar, right? Yeah,
Yeah, yeah.
it's good. I just didn't want to finish the news on always negative, so I thought, British company,
Now, if you didn't
Scottish
want to finish the
company, doing well.
if you didn't want to finish the news on negative, then we won't talk about one of your stocks that is taking an absolute panking
Oh, if we
in
have to,
the last
go
week.
on then.
Clydesdale Bank. So Lewis first invested in Virgin Money,
Yep.
and he was. I can't remember what you got in, but you got in at a decent rate, and then there was the offer by Clydesdale Bank to snap up Virgin Money. Did you get were it pure share trade offer, or did you get cash as well as
It was share
share
trade-off, but there was a chance to
share?
actually sell for the offer price.
Right.
Right now, I'm
Yeah.
wishing I would have done that.
Usually what happens there is that the offer will come in, and then the market will elevate to maybe that offer, or maybe like minus, 0.5% or something like that, and it'll sit there until the actually offer or the takeover gets either
Finalized.
accepted or rejected, and it'll either just get cut from the market, or it'll just tank back to what it was originally. So do you know what's actually happened then over the last week with regards to Clydesdale Bank and why it's dipped?
It's
Going down to its third quarter trading update.
yeah, something to do with its mortgage profitability or mortgage lack of mortgage sales, I guess, or mortgage lending. Um,
Okay.
so there's a measure on bank, isn't there? It's like almost like an acid test type situation. I think it's been
Right.
around for a while, um, like the technique that they use to measure how well
Is
banks are doing.
this the stress tests? This is the stuff that came about after the last financial crisis, right? How much liquidity they can provide straight away if things do get messy and things hit the fan.
Yeah. So I think there's
That's
a
what.
stress test and then there's this measure of profitability. God, that's a
Right.
mouthful. I think they're very
No
similar.
wonder you.
Yeah. In what they're essentially just it's a way of a public measure, isn't it? Because a lot of banking's done behind closed doors. It's not always clear to see how well a bank is performing. So with these kind of tests or measures, you can obviously see how well they're
Get a
performing.
better
Yeah.
indication. Yeah. Fair enough.
Yeah.
Okay, that's cool.
So that's seen
So
a
it's
dip, and essentially it's
boy, is it seen a dip, but it's not. It's not the worst. Well, it is the worst for the week. We'll get onto that later, but
yeah. Just throw the point out there. It's the worst of the
well,
week.
it's the worst of the week, mate. But don't worry, I think one of my shares will be taking that spot next
Right.
week. Right, I think that's it for news. Do you want to?
Yeah.
Should we bounce on something else?
Yeah. Well, we can. What do you want to do? The
Get on to
performance or the charts?
let's do the charts. Let's do our
Right.
just do a review of our portfolio and just let people see what we have in there, see what percentages it makes up of our overall portfolio, and let's basically give I guess a reasoning why we've got what we've got in there and what our future plans are for the current holdings that we've got.
Yep.
Yeah.
Yep.
All right. Who should we go through first? Dun, dun. Oh, you got them both at the same time. On right under the photos. Look at that layout.
Yeah. Point to
That's why
it.
you're in charge of that's why you're in charge of the technology stuff, and I'm just bumbling around and trying to put words into it.
Yeah.
Right. Do you want to go first then with yours?
Yeah. I can roughly cover that off. So Amerisa or Amerisa, or however you say it, resources.
Marissa?
Yeah, this was kind of,
Tip off,
yeah, it
right?
was a tip from Dion. Basically, when he explained it to me, it's a company that had, well, we've talked about them previously on this podcast. Company that had a few oil fields, drilling, testing, producing oil, and essentially reporting quite strong figures from that.
So yeah, I think the main thing that I enticed you in with, they've got zero debt on the books. They've got 75 million cash in the bank. They've got some very, very good strategic assets in Colombia Play. It's quite near the Ecuador border as well. They have some producing maybe 5,000 to 6,000 barrels of oil a day currently at the moment. And yeah, Lewis got in roughly just after they'd had the news that Indico one had just come in, and that was a massive well, so it shot up to around 20 pence, and then I recommended Lewis to jump in at around where it's 16.
I think I managed to get in at 17.
16, 17, and then unfortunately after that we had a duster reported at the Sol 1 site, and then that dropped it down to around 12 pence, where it's been kind of sort of scumming around for the last couple of months. And I initially told Lewis that this is probably a good stock to have because I reckon in the next downturn, or if you give it a couple of years, it will develop into something big, or it's going to get bought up. It's going to get bought up by a bigger predator shark. It's just seen it, so it's got a good strategic position. There's some players in Colombia already, and one of these boys might just say, right, I want that. It's cheaper to buy that than it is to actually go out and fund his own drills and find the oil there himself. So we'll just snap them up, and then lo and behold, here we are.
Within a couple of weeks,
going
yeah.
on. Yep.
It was quite a surprise, to be honest. Like,
still quiet though. We've not heard
no.
anything else, have we, since that initial offer? But I reckon they are just putting together their proposals.
And you think the deadlines, or wasn't for, it was 28 days, wasn't it? So I think we're into the end of week 2 or the start of week 3, because I'm not really sure when they announced it.
I think there's 28 days if it's 28 days of silence, that's when it's called times. But I think if they get offers for an app, they can continue extending it by 28 days.
Ah, okay.
Yeah.
But we won't hear up for 28 days.
No.
Right. So that's fine. Because there could be an offer, but we don't know what the offer is.
Not yet.
So yeah, hopefully we'll know more in the next kind of week or 2. Because I need to double check.
Well, I mean, it depends. Doesn't it? I think once one of the big fish start to throw it out, I reckon that's it. It's going to be the real starting gun, you would hope.
Yep.
And the rest of them are just going to get involved and turn up to the feeding trough and get in.
Yep.
We'd hope.
We hope. Quickly moving on then. So I've also got well, we talked about Clydesdale Bank. Why did I get them? Well, I didn't buy them. I bought Virgin Money.
They bought you.
Yeah. Um, I kept hold of them because I knew their strategic position was that they're investing heavily into kind of digital technologies and digital markets to make banking more mobile and just easier.
Oh yes, like a challenging bank trying to get a bit of market share through technology for younger generations, perhaps.
Yeah, and I just know that the easier money is to flow, the easier that people can use it and handle it and check on it and monitor it, then it just like
And spend it.
people prefer that. It does actually tend to work like that. Um, you know, PayPal, the first to the market,
Yep,
and look at them
true.
now.
Yeah, old Elon's rubbing his hands together
Well,
with
he
that
already
one.
sold it, didn't he? Sold it a long time ago. That's why he bought a space company or built one. But yeah, so it's just kind of keep hold of them because they've got the same kind of strategic goals, and it might not be them that makes the first one. I know that we talked about Monzo, but
Yeah.
yeah,
So it's a longer term investment for you then,
yeah, it is,
basically.
yeah. We've got P-Box, where this was one of the first ones that I bought, again,
It
from a
was one.
tip from you. And I actually,
Got in early from them. You must be seeing some pretty
no,
decent.
I didn't. I got in at a bad time. Um,
Did
I
you?
mu-
Because I told you when they were just dropped after Brexit and they dropped down to £1.17 a share, and that's roughly when I got in originally.
yeah,
And then did you get in a couple of weeks later, maybe at
yeah, I
130?
think it was around 135 or 130. But yeah, essentially, I only had a little amount there, and I invested it. It was kind of like a first effort just to see how it
Yeah,
all
toe in
works.
the water.
Yeah,
See what the water's like, how
and
warm.
I've got that little in there now that I have to make a huge profit for me to pull it out. But it pays dividends,
How
right?
much? It does pay dividends, so you've got that now for what, 2 years worth of
Yeah,
dividends, and then you've roughly banked. I think they're trading at about 155 a share at the moment,
yeah,
so it's still 20 pence on each
yeah.
share. So it's going to be the classic case of your only problem was
Didn't
you
buy
didn't
enough.
buy more.
It's very, very true. And Sirius, our favorite one.
Oh, that's the elephant in the room, really,
Yeah.
isn't it? Let's be honest. I mean, you look at both of our charts there, and it's a solid 40 odd percent for both of us.
Oh,
We're
it's a shame we
big
couldn't change
in
the
the North
colours to
York
match.
laws. Yeah,
But yeah, the 41% in yours and the 48% in mine is Sirius Minerals. Um, we see this as kind of, I mean, you've got your reasons, I've got very similar reasons, and it's also a British mining company, and yeah,
we've been seduced by the Northern Powerhouse project here through and through, haven't we?
yeah,
Yorkshire boys, Yorkshire project, yeah, dealers in.
and we've got to feed a lot of people in the future. There's a lot of mouths to feed.
Yep.
Going to need fertilizer. That's what they're pulling out of the ground.
Yeah,
Basic.
so it's trundling along. They've still got the second stage financing that should be tied up by the end of September. Once that's dead and buried, you would hope to assume that it's just sailing towards the blue shores of Whitby, and then we can ship it around the world. And I think the main reason we bought into this is in the belief that if we get in early now, the yield that we're going to have later on when the mine's operating in 2021, and then when it's up at full capacity in 2026, the yield's going to be up in around 30% for us with regards to how much we're hoping it's going to churn out in dividends. So that's going to be a solid wedge each year that it's just going to be throwing at us and that we can then reinvest, and it's just going to set us up nicely for his 30s.
Yep.
We
And
hope.
every time they test drill, they seem to get better news than they did previously in terms of the
Yeah,
quality of the product in the ground.
yeah.
So
The
here we go.
agronomy trials, agronomy
Test
trials
holes.
seem to be also, yeah. The plant tests also seem to produce some nice yields as well with regards to fruit. They've got a load of offtake agreements. They've got over 10 megatons per annum in offtake agreements tied up. It's just, I think it's just at that phase where there's sort of a lag. I looked at a chart the other day with how mining stocks work, and you have the initial sort of massive upward curve when, like, for example, gold's discovered or the minerals discovered, and all the excitement and hype pushed it up to astronomical sort of like heights. And then it gets to the peak, and then that's when they announce funding at its optimum
Yep.
amount, and that sort of drops it off. And then obviously now they've got the funding and they put it into the engineering, and there's that long lag phase where nothing really exciting's happened. Everyone's just waiting for the mine. It's no longer an explorer, but it's not a producer, so it's not really got anything to show for it.
Yeah.
It's just sort of
Spending money.
building
Yeah.
the. And that's what we're in now for Cirrus. We're just waiting for that lag engineering phase to finish, and then we're going to hope that these dividends start kicking in and the profits start rolling as well. And then this is definitely a long play for us, without a doubt. I would say in terms of my portfolio, I'm holding this for at least 10
Yeah,
years
10-year
time.
game plan. Yeah, minimum.
Yeah.
Right. I think. Oh, I've got a lump of cash.
You've got a bit of powder in there.
So this was I had an old ISA that had been kind of locked up for a couple of years, and when it came in, I didn't really need it. I had a look at the kind of ISAs that were around, 2-3% for another 3 to 5 years. Thought that's not worth
Yeah.
it. So I transferred it. It takes about a week to get the transfer put through, and it doesn't come out of any of your ISA allowance because it was locked up years ago. So it's just sat there, just waiting. And when I can contribute a little bit more towards that using this year's ISA allowance, I will invest the entire sum into my next
Chunk.
one. Yeah, big dividend paying stock.
Good. Yeah. So just to clear up, what's your yield like on your overall portfolio at the moment, and how much are we bringing in yield wise?
Yield as in dividend yield?
Yeah.
I didn't check that figure.
Whoa, basic sums. No
It's
worries.
low.
We can catch
It
up
is low.
for you.
I think mainly because I'm
1%,
invested so high into Sirius
Serious.
and Americia. It's quite low at the minute. About 2% ish, 2.5%.
Fair enough. Right, we'll move on to mine then, which has slightly more colours. Looks a bit more. I wouldn't say interesting. It just looks a bit more bizarre with regards to some of the.
Let's go with diversified.
Got on there. Yeah,
Strong word.
diversified. So many colours in there that two of them look pretty similar. So let's start with Americia. I can't even see how much. Which is that 6.992% for the light blue? So small on the screen. I'm gonna have to jump back up onto the one note.
Yep, 6.92%.
6.92%. So yeah, as Lewis mentioned earlier on, and then I jumped in to throw out my little bit of knowledge of regurgitation that I've just done for America. Yeah, I got my average is a bit lower than Lewis's because I started throwing it in there around 14 pence. I put in at 12 pence, and then I also put in at 9.8 pence as well. Purely because, yeah, I thought the assets were good, the cash balance is good, it's making profit, it's making the 6,000 barrels a day, it's got some good assets that it's just uncovered. The only problem is they're just very slow at the drills, and the board set out very ambitious targets, and often they won't follow them through, and that sort of just crushes market sentiment. So a lot of people get frustrated, and people have sold out, and it's pushed the price down. But now, obviously, we've got that bid situation, it's bumped it back up, and I'm hoping that by the time it gets out, I'll have had maybe a three bagger, a multi bagger, and I'll be able to put less money into some dividend paying stocks. Right, this next one on the chart is Aviva. So obviously that's an insurance company. It's a FTSE. Is it the 250 or FTSE 100?
I think it's 250.
It's
Yeah, I was
250.
looking into them the other day. They pay a good dividend, don't they?
They pay a very good dividend, so I got in purely for that reason. It's around 7% at the moment. It's a big giant. It moves quite slowly to the market. If you want more something for capital gains, you're probably better going in with legal in general. There's quite a lot of pension funds. So it's always going to have that sort of like business there. I think it's trying to restructure, trying to get itself into a more leaner machine. I think they're trying to cut 3,000 jobs in the next couple of years to save 300 million. They've just got a new guy at the helm as well, and he's looking to push it forward. So we'll see how it goes. But for a 7% yield, that's a fairly, in my opinion, safe stock. Yeah, threw a fair bit in there. Thought it's good to go. Right, next one, British Land, 8.3%. So this was doing all right until maybe the last sort of 4 months, where it's just said, no, don't fancy this anymore. So British Land is a RIEIT portfolio. So basically what it is there's like a conglomerate pool, all the funds all the money that for the shares gets agglomerated together, and then someone who manages the portfolio goes out and buys property in London. So they'll buy real estate, they'll buy offices, they'll buy shopping centres and all that sort of stuff. So I got in roughly around £6 a share. The yield back then were like 5.3%. It had a net asset value of the portfolio of £9.30 per share. So it was already trading down at what, a 33% discount. So I thought decent. They've constantly bumped up the dividend for the last sort of like 7 years. So it's got a consistent growth. It brings in a nice return. So I threw some money in there. I thought it'd be a decent sort of investment. Obviously now the retail sector's taken a bit of a hit. British Land over the last week has also taken a massive hit because one of their rivals called Into, they have a lot of retail sort of property, and they had some pretty poor results, and that's dragged down British Land this week as well. So I said they were around about 5% yield at £6. They're probably, well, I think today they finished at £4.80. So I've lost a bit of that in capital terms, but like I said, I'm leaving it in there for the dividend. Admittedly, I'd like to have thrown some more money in now, because the yield's probably up at around 7%, maybe 7.5% now, so it's getting pretty interesting. So that's that. That's a very good yield. Next is Emerson. So Emerson is another little venture into the fertilizing business that I've fancied. It's a company that's found a really it's potash for a kickoff. It's not poly 4 that we have over in the stronghold of the Yorkshire. And this is based over in Morocco. So they reckon they've got a really sort of cheap mine that's got good facilities right next to their distribution for the ports. It's quite flat as well. I reckon it'd be easy to develop. And in terms of, what's the word? Operational cost to get it out of the ground and sell it is very, very low. And then they've got a massive offtake agreement with Brazil, and they're just going through the feasibility studies now. So I'm hoping that it's got a bit more legs to go with regards to this is at a lot earlier stage than Cirrus. It's not in the long protracting engineering phase. It's still sort of in the early early sort of exploration phase. So I threw a little bit in there for, go on, I'll give that one a whirl, but not a lot. That's why it's going down at 3.25%. Next we have Hurricane. This is another big venture for me. I really like what they're doing out there. They're looking for fractured basin oil reserves on the west of Shetland. They've found, I think it's nearly 1 billion barrels worth of crude oil down there, and they have recently brought their early production system online for their Lancaster well. They're pulling out around 10,000 barrels of oil a day. They're going to be looking to bump that up to 20,000 by the end of first half of the year. So they're going to be producing a lot of money next year. They've got other assets as well that they're trying to basically bring to production. They've got a 50% stake in another field with a operator they are operator, but there's another company that's helping them called Spirit Energy, which has basically funded another 3 wells. The only problem with them at the moment is the oil market's just tanked again, and that just decided to throw out them tweets with China. But they're in a lot better position than they were a year and a half ago when they were trading up at around 60p. They're now at 42p. They're actually producing oil, so they're actually now producing revenue, whilst back then it was just purely an exploration. So they're in a much stronger position. I generally think, for me, I'm holding these because I do believe in the future they will be a target for a takeover. And I reckon the takeover price is going to be in the pounds. So I'm holding firm. So I've built a nice little holding in there. My average is probably around 35p. So I'm still up at the moment, but I do expect this to be a multi-bagger for me. And in the meantime, if it's not snapped up in the next couple of years, I do expect them to pay dividends as well once they start proving the reserves and getting some serious sort of extraction from these wells. So that's Hurricane. Next is National Grid. So that's a fairly safe sort of utility stock that I've got on there. They got in around them at around £8. The yield was pretty attractive. They obviously always have the threat from nationalisation with regards to Jeremy Corbyn, because he's very keen on that. But they do have business interests over in America, so the falls from nationalisation shouldn't be that bad, and obviously the dividend more than makes up for that for me. Next up, we've got Powerhouse Energy. So for me, this is another rogue venture one, kind of like the Emerson Potash mine. It's more of it's a small little company that I'm hoping has the potential to get into somewhere big, a little niche in the market. So these boys, this company. Let's get PC, yeah, let's get proper. So this company it's got a prototype site up in Cheshire, and what they're trying to do is they're trying to convert waste plastic into hydrogen fuel and also into
Yeah,
electrical
I
energy
keep
at the same
hearing
time.
stuff about
So they
them
do
in the
that through
news actually through the IET. Yeah, pops up regularly.
It's a very interesting concept. I'm willing to throw a little bit of money at them. It's not a particularly large part of my portfolio, just to see if it does kick on through. The shares are trading at very, very low prices. We're talking at half a penny. So you're looking at a potential 100 bagger here if this technology kicks off and it gets some contracts and they have the site proof that then people can come in and say, well, it works. We want to buy X, Y, and Z, because I generally believe that the hydrogen economy is going to be the next step after electric. So I'm going to try and get in there early.
You mean the next step before
and then
fully
hopefully in the
electric,
future this.
correct?
No,
Yeah.
because you've got fully electric cars. So I'm thinking the hydrogen buses, hydrogen trains, and all that sort of stuff. I think that'll
Really?
be the end game. Because I think it'll be cleaner than
No,
electricity.
I don't think we'll ever go back. No, because I think you
You
can
don't think,
produce electricity from hydrogen. I think once we go to electric, that's it.
but you can literally produce electricity from plastic, and how much of a problem is the plastic
Yeah,
with
but
regards
you
to the
could
world at the
produce
moment?
that on a
Like got a
huge
massive
singular
that.
site that would feed lots of cars versus trying to do it on a small scale
Yeah.
lots of times to yeah. That
Either way,
I'm
don't be
not
dumping
dumping
on
on your
my
idea. It's a very valid idea. I
little
just think the
venture stock up.
hydrogen economy will come in a step away from fossil fuels before we get to full
Yeah.
electric. That would be my vision.
Okay.
Yeah.
We'll see. See how it, yeah. So that's Powerhouse. It's a little one. It's a more of a technology stock that I'm gaming on. Next we've got Pennon, about 5% there. So that's a utility stock. That's a water company in the UK. They own Southwest Water, is it? Around the Bristol sort of area. They pay a nice dividend. They've got a solid progressive dividend where they're increasing their dividend yield each year greater than the price of inflation. So you already know you're always getting
Yep.
returns. That's due to expire in 2020, but I'd imagine they're going to still continue to bump up their dividend because they're always a very high performer with regards to the water companies in the UK. They don't often get in trouble like some of the other big players like Thames.
There's loads, right? There's loads of issues. Yeah.
There is loads. Yeah. So we've got two more left on the little diagram. We've been through Cirrus, obviously a solid wedge of my holding there. This is the one that I'd been flirting in and out with for the last 3 years, really. I guess this is the stuff that got me into investing. I thought, yeah, this is good. I've seen it go up and down. I could have banked multiples already and cashed out, but I didn't because I didn't know what I was doing. So this one for me has definitely been a learning curve. It has been my stabilizers on my little tricycle for sure. I could have, stop losses would have been helpful on this thing. Setting limits, oh yeah, you definitely learn a lot with this one. It toys with your emotions.
But you didn't give up, so that's the main thing.
I've not given up. I still believe in the
Yeah.
project. I still believe it's going to come good. We've got Taylor Wimpey, house builder. They have a pretty good yield. They have a special yield, so it's not guaranteed each year, but when they do pay it, you're looking at 13% yield each year. They got a bit of a pasting this week. I don't really know why. They had a small dip in their overall profit compared to last year, but not like a massive fall off. We're talking like a couple of percent below, if that. That was mainly due down to their raw materials costing
Maybe the
more.
weakness of the pound influencing that as well.
That, yeah, and then people are also worried about that the Help to Buy ISA becomes redundant soon, a couple of years' time. And I think they've made a lot of money recently from that. So I think people are being like, what are you going to be doing after that? So it's tanked a little bit, but they're still going to be paying. They've already announced next year's dividend, and it's already up compared to this year's. So I'm only in it dividend. I'm just going to leave it there. And then I've got Wood Group, which I've been bragging about for a while, but then it came back to bite me this week, and it's so that's an oil service provider. So they do a lot of engineering work for oil companies. They'll design oil refineries. They'll design drills,
Yeah.
equipment, all sorts of stuff. Not just purely oil. They've also got stuff in renewable energy as well. So they are diversifying. So they jumped nicely when I first got in. So my yield with them is roughly around 7% dividend yield, which is good. So yeah, I'm still up. I'm still believing in Wood Group. I still think there's a lot of legs for it to go, legs for it to gallop. I still believe so. I'm going to stay in there for the dividends as well. And then for my overall breakdown of my portfolio, it's roughly around 3.5% is my dividend yield.
Yeah.
So I've been slowly building it up. Yeah, even with that fat wedge of 42%
Yeah.
in Ceres
But
Minerals.
hopefully that'll be a dividend paying thing in the future.
Well, yeah, when that becomes a dividend paying thing, the yield's going to go from, 4% up to like 25.
We'll see.
It's the
Right.
dream.
Thanks for that. Your portfolio looks nice and diversified. Mine looks a little bit.
I've got a lot more skittles going on in mine, right?
We'll work on that over this next 12 months. Or after 12 months, we'll work on that.
Well, yeah, after 12 months, you'll get a bit more colours in there, more slices of the pie.
Right, we'll jump across to this week's performance then, since though we laughed about it earlier. Right. So.
Ooh.
Not good.
Should we start with the good news?
Yeah, okay.
So it's definitely been a bad week for us. You can see that our three best performing portfolio stocks between us have averaged less than 3%. I think there were only one other one that were in a positive green chart. And I think most of them we can pretty much say it's just typical sort of volatility and fluctuations in sort of stack noise, background noise. And Mauricio, we just mentioned it's already still in its bid situation. We've had no new offers yet. Expect that to jump when we do get something in. Cirrus, standard sort of fluctuations. I'm pretty sure it's already evaporated them gains that it made last week, this week already, just after one day. And National Grid, yeah, it's nothing really to talk about there for the 1.25%. And then we move over to the top worst performers of the week.
Some big losses there, isn't there? The good thing is you don't have to recognize them until you cash out, right?
Yep. If you're in it for dividends in the long game, like you are with Clydesdale Bank, then a 20% loss in 1 week, you would assume that gradually over time that's just going to be negated, and you're still going to be racking up.
Same with you for Wood Group and Taylor Wimpey, though.
I can't really put a particular thing on why Wood Group's dropped though this last week. It's dropped from 550. It's down at around 480 this morning. It opened up at. And for what I can see, other than the $4 drop in oil that we had last week, and that was from Trump tweeting about the China-America war, I can't see anything why they would have lost so much value. They do have their results announced in the next couple of weeks, and that'll determine whether or not their dividend's going to be cut or whether they'll continue doing it. So maybe people are getting a little bit itchy. Maybe people are just banking some earlier gains that they made from when it rose from £4 up to 550, and it's going to fluctuate a little bit before it's established a new level. But yeah, I can't put anything on it at the moment for Wood Group. Then we've got Taylor Wimpey down 11% there. I mentioned that earlier on. Housing costs, they had a trading update that wasn't as good as people expected. Yeah, it looks bad, but the dividend's still so high for me that if I'm keeping it in there for 2 or 3 years, like I just imagine it to balance itself out, and the dividend will pay for it off. And I'm going to keep it in there for a while anyway, so I'm staying put on that one still. If I had some more money, I'm not sure I'd put it in. I'd probably wait till the whole escapade of uncertainty clears up a little bit in October, when either the UK stays in the European Union or decides to leave. So I think that's that cleared up. We don't really have much more to add to it. We've kind of gone through it really on with the breakdown of the portfolio.
Obviously a little bit disappointing when you see it like that, though. Big red figure.
It really is. Yeah.
I'm losing light fast. I'm gonna have to figure out what I'm gonna do about lighting here, because it's not great. Yeah, I'll have to get one. It's not in here right now, but for future. Yeah. Is there anything else?
Why? put it on the action page. Did you want to do the
Are you ready for that?
book review?
Are you
I mean,
ready
I've
for
already
it?
wrote it all up.
So I
Thought it was
asked.
Let me
Okay.
jump into the.
So basically, this
where's the
book,
book review?
I've started listening to it off of your recommendation, and I think he had me hooked after like the first kind of chapter. Yeah, he's a good storyteller.
Yeah, he is a very good storyteller. So I've got the review up here. I can quickly run through it if you want, and then we can start discussing certain stuff since you've started to listen to it now, and I've got a bit more
Yeah,
background.
sure.
Maybe it'll help me refresh it as well. So, what is the book about? So, this book is about developing and recognizing effective tools to enhance your negotiating arsenal, allowing you to swing the tide firmly into your favor when you're negotiating with in any sort of aspect in life. So, the guy who's wrote this book is called Chris Voss. So, he's coming from a background in FBI negotiation. So, he was the guy that was on the phone talking to these people, had people at gunpoint or whatever situation, and he would try and negotiate them with what little resources that he had to try and get these people released. So it's a very crisis and results driven environment that we were in. The pressure were intense, and it's just the book sort of it's a combination of him explaining negotiation technique he has developed basically from working in the field as the FBI hostage negotiator. So yeah, he then backs these up with his brilliant examples and stories. So I think it's got a right balance of information. It's fascinating. The pacing in the book is particularly refreshing. It's not like some of the other books I've read where you can read like 20 pages and you're bored and you like put it down for the day. You can quite easily get hooked in this. The techniques are good. You can definitely apply them to any sort of life situation that you want to do. It's highly rereadable. I reckon you can quite easily dive into it just to sort of refresh yourself with regards to whether you want to look at mirroring, shadowing, labeling, just to jump back into it and get a bit of a
1 second then before you move on.
Yeah?
So yeah, that's one thing that really jumped out at me is he's very clear that life is one big negotiation. You're just negotiation after negotiation.
Yes.
Every situation.
Don't think
Yeah,
it's just for business.
it's interesting the way you put that point across. It can be buying a new car, buying a sofa, or down to negotiating jobs.
With your
Yeah,
partner who's
looking
going to
after
do
the
the dishes
kids,
or like,
talking
are
to
you
your
going to go for the
kids, like
weekend
there's
or whatever
just
it is?
every
Yeah, yeah.
situation that revolves around negotiation. There are these tools which you just listed off there. We'll go over them again, but like mirroring and profiling and these techniques that he uses can help you to get the best outcome for you.
Mhm. And you might feel like you're a robot at first trying these out, but I think you'd be surprised that the people that you're trying them on probably won't even realize because they're in their head trying to get exactly what they want from you straight away. And then when you start probing up, for example, mirroring is repeating sort of like the key phrase that they've just said to you, but like do it in a question mark way. So then they will open up to you and give you more information. And obviously, the more information you have, the better you can negotiate and like determine what the person is that they want, and like try to get to the goal of getting both people satisfied with the outcome or feeling like that they've got a good deal, as opposed to one person winning and one person losing, because then you just won't be able to do business with again. So let's just go through the topics with regards to what the book contains. So the book contains various methods on how to connect with the person you are communicating with. People will not do business with you if they feel they are not being heard. So that just goes back to what we've just said there. You can make them feel like they are being heard by using techniques such as mirroring and profiling. This will open them up to provide you with more information with regards to what they are after and how almost they want to be talked to, how you can communicate them, how you can relate with them. So what sort of gets you on their page?
A lot of people go into negotiation with an idea of what they want, but it's not always what they say. As in the back of their mind, they know what they
how they
want,
articulate.
but what they're saying doesn't always convey that.
Mhm.
So by you asking these questions and using these techniques, you can actually get to the thing that they actually want, and then the real negotiation begins. Type of thing.
Yeah, so that's the thing in it. The more information you know, the better
Yeah.
equipped you are to negotiate with the person. So the second part of the book discusses certain strategies that you can apply when it comes to creating a deal. Things like letting them open with an offer or starting with a lowball offer. I talked about. Examples are also given when these strategies are best suited. So what else you can get out of the deal besides just figures? If you start throwing in other objects, the deal becomes more personal, for example. So if you've said to someone, oh yeah, they want their rent for your house to go up to $450 a month, you can't afford $450 a month. If you said to them, oh well, my maximum I can go to is, let's just say it's $336, and I'll throw in my toaster as well, because that's literally like, you like the toaster, take the toaster. You've made it a little bit more personal as
Yeah.
opposed to just throwing figures at each other, and you've almost you've distracted them a little bit as well, and it's caused them also made the thing then like he's throwing his toaster at me. He can't have anything else to give. If I kick him out, I'm not going to have any revenue. So do I really want to do that, or should I just take this figure that he's offering now? So yeah, don't just meet them halfway between both your figures, and don't be afraid to say no, but just choose how to say it. So there's quite a lot of reference in this book in that he likes to negotiate with people, and he likes to get them comfortable with saying no straight away, because he mentioned there's a lot of people that do sales tactics where they get up, they have a script that gets you to say yes each time because it's well rehearsed, and you're stuck in that mentality, and they think that you could close the deal, and then when you get to the end of the script, you're kind of like, oh yeah, I just need a little bit of time to think about it or whatever it is, or they'll say yes in order for you to go away, and then when they actually push comes to shove and you want their bank details later on or their contact details, they're not going to give you it because they're not interested anymore. But if you get them comfortable opening with no, then they feel they're allowed to say no, and then you can work on getting them what they want
The other
and what
thing
you
there
want at the
was
same time as well.
the comfort thing. So if you make them feel comfortable, or
Yeah.
you don't make them,
Yes.
they feel comfortable with that conversation, then they're more likely to make a deal because they're in a comfortable position. Whereas if you got their back up,
Yeah. There's also.
because they're having to force answer yes to all your questions, they're unlikely to make a deal at the end of it.
Yeah. Yes. So what was there?
Well, I think
I've lost a bit of track there. So yeah, there was also ways how you can say no. For example, there's obviously closed questions that he was talking about, and then there was other ways of saying no. Instead of just straight up flat and saying no, you could say, for example, oh, how am I supposed to do that? Like you're offering them to give you a solution of how you are supposed to answer their question or provide them what they want. How am I supposed to do that? Now you're getting them to think, and you're buying yourself time there, and they're trying to help you with regards to the answer. That's another technique he gets in there as well. So there's definitely interesting stuff that he's got in there. It mentioned that you will feel uncomfortable the first time you try the techniques in the book, but with practice it will definitely become easier. I've definitely applied this myself to a couple of real life situations, and have been pleasantly surprised with the results.
Yeah,
I need
slow
to
it
stop
down.
speaking
We're
so
in no
quick, man.
rush.
My brain's at the end of the sentence, and I'm still trying to say the first bit of the sentence, and then they come together in the middle. It's like
Okay then. So
absolute
you were
brain
saying
fat. And they look at the
that
camera.
you've tried some of these and that you've been surprised.
Yeah.
Would you be willing to give us like an example of one that you've used? Can you think of it?
I think the easiest example that I had is I had a meeting with Severn Trent Mortar with regards to the liquors treatment plant that
Yeah.
I'd been designing. Weren't happy with my design. Now I could have gone in there and argued the toss of them, saying my design with a dog's balls. I've done the design calculations. I've got the theory to back it up. But essentially, they were still arguing toss of it. And when I started using these techniques, for example, well, how do you want me to do it? What do you want me to do? Like, how can I do that? I can't do that. How can I do that? And then I make them start to think, and they're like, oh, so we want you to do this. And I was like, well, you want me to do that? And like mirrored the question, and they said, yeah, we want you to do this by this, and you can provide us the test results like this, or you can provide us reference sites, or you can, and basically they started giving me all the criteria that they were actually after, as opposed to me going in there and saying, well, it does what you've asked for in the design spec, but you've
What
not
you
actually
want.
told me
Yeah.
all the information. You've just sort of scraped the barrel to get a cheap solution, but you really want to get your bang for your buck. But also, I obviously want to make sure the engineering design's correct. Now, obviously, I'd like to have got some figures flown in there for number-wise, but I'm an engineer. I'm not actually a sales engineer or involved in anything like that, so I didn't have opportunity there. I've not had any chance to put it into a example for like buying a car. I've not done that. That would have been cool. I
Yeah.
would have liked to have tried it in something like that. But just talking to friends as well, saying like, oh yeah, can you come down and visit me in London? I'm like, what do you want me to come down and visit in London for? Oh, it's so and so's playing at football there. Oh, I'd like to come down, but I'm doing this. Like, could you do anything to sweeten the deal for me or whatever it is to come down there? Could you pay for my train
Yeah.
tickets to come down or something?
Fair enough.
And you'd be surprised.
Yeah, that's interesting. I've obviously only just started the book. I've uh, well, I'm intrigued and trying to remember what he's talking about and these techniques. I'm definitely gonna have to revisit it because I forget them all the time. But yeah, I'm interested in applying some of these techniques just to see how they work. But yeah, keep going then.
Yeah.
Keep reviewing this book.
But yeah, as I said, as an engineer, it's difficult to apply all the lessons from the book, but you don't have to use them
No,
exclusively
it's not like it's
for
a be all
deals.
and end all of
It can
life.
work.
It's just a tips and tricks book. No, I'm getting tongue tied. Yeah, there's a tips and
Yeah.
tricks. um,
Tips
yeah,
and tricks, tongue tides,
yeah.
Monday night.
Late night,
Blah,
Monday
blah, blah.
night. Yeah. Right then.
Right. So who should read the book? People who are interested in improving their negotiation skills, whether that is for business or social purposes. The stories and example in the book also make it quite entertaining, and it had me thinking multiple times, how the heck has he pulled that off? For example, there were one where he was negotiating someone who had been kidnapped. I can't remember whether it
I
was in
think it's
Colombia
Taiwan.
or some
The one
sort
you're
of.
talking about. No.
Uh, Not that one, but there's a different one where they basically trapped him in a
No,
boat
I
after he'd
haven't
been
got
drugged
that
in a
far yet.
taxi. Oh, right, Taiwan. So the one in Taiwan's a really good one because he basically said he would negotiate with this guy. He eventually got him to release the people for no financial gain whatsoever. And then 2 weeks later, he got a phone call up from the same guy, and he basically said to him, "Oh, have you been promoted yet?" He goes, "Oh, no, no. Why? What do you mean?" He goes, "Oh, you were really good with that negotiation. I was going to kill those people until you got on the phone with me. You were really good. They should definitely promote you. I'd do business with you again." Even though like he got absolutely screwed in that deal, he didn't get anything out of it, but he just didn't kill those people.
Yeah.
So I thought that was a really funny story. So the price for the paperback copy was around £7, which is a small price to pay if you can knock off many figures from your car or rent prices, or you can apply it to other aspects of your life to get some sort of better deals. So I'd definitely recommend it. Scores on the doors, I'd give it entertainment, I'd give it a 5 out of 5. Price, I'd say for what you can save later on down the line, it's a 5 out of 5 as well. Content on the subject, again, it's pretty much irrelevant. It's pretty much relevant to the whole topic of the book. So I'd give it a 5 as well. And then rereadability, I'd probably give it a 4. It's quite easy to dive back in, and the story is quite good.
Yeah.
You can refresh your techniques. So overall, it's pretty high up. 4.75
That's fair
is
enough.
what I've
Yeah,
thrown
no,
down
I
here.
can agree with that. So far, it's been quite entertaining. Again, the content on the subject. Well, he's telling us, he gives the tip or the tool, the example of what it's meant to do practically or theoretically what it's meant to do. And then
Breaks it
he
down,
backs
doesn't
it up
it?
with
Yeah,
a
breaks it
story.
down. Why,
Yeah.
what you're doing, evidence, story, and then gives you examples of what scenarios you could do it in an everyday life to life, as opposed to saving someone in a hostage
Yeah.
negotiation in downtown New
Not gonna
York.
happen for the regular Joe. No.
No, no.
Fair enough. Yeah.
I think that's it for the. Unless you've
No,
got anything
that's
else
it.
you want to wrap up with.
I will say, next month I'm gonna see a little bit of disruption in my schedule. So we'll try to work around it. I'll try to let you know ahead of the game on social media. We're gonna be aiming to get a lot more active over the next month or two on there. So yeah, check in there if you
We do have a YouTube channel, so the past podcasts that we have been doing since episode 1, the videos are now up on our YouTube channel, which
Yep.
is Invest Interest on YouTube. So if you're interested in going back and rewatching some of the videos that you might have missed now that they've disappeared from Twitch, they are archived on there. It is unfortunately at the moment just the full episode. We will be looking into the future to maybe sort of shorten it down into certain small little clips for certain particular topics
Yep.
going forward.
And I guess that's all from me tonight.
Yeah, that's all from me as well. Well, I'm gonna have to actually think of some stuff to go over next week. It's been a bit of
It's
a
not that
spontaneous one
spontaneous.
tonight.
We had the stuff prepared and ready. Yeah. All right then. Well, thank you very
Yeah.
much for watching, and we'll see you next week.
Yep. It's been a pleasure as always. We'll catch you next week. And remember, if you want to go check this up out again and something that you've missed tonight, head over to the YouTube
Leave us a
channel
comment
and
if
give
you've
it a
got any
whirl there.
questions. We'll get back to you as soon as we can. All right.
Yeah.
Thank you.
All right.